Hello. Welcome to the Economics Explored live show. I'm Gene Tunney. My show host is with me, Tim Hughes. Tim, good to see you on a Friday afternoon.
Hey, Gene, good to be here, mate. I'm in civvies today, so I'm pretty casual, but I'm here.
Casual Friday.
Casual Friday.
Okay. That's okay. Yes. So it's Friday, the 19th of November. We're broadcasting from the Adept Economic Offices in the Johnson Hotel at Boundary Street, Spring Hill, Brisbane, Australia, and glad to have you with us. So today, as usual, we're going to review some of the big economic news of the week, and this is based on my judgment. And the big stories, in my view, are the latest UK inflation data. So, Tim, we've been talking a lot about inflation, the accelerating inflation in advanced economies on this live stream. So we're seeing that in the UK now as well. We've seen it before, but we've got the latest data from the UK, which was 4.2% through the year for October. So let me just bring that up on the screen there. Okay, so we've shrunk, and then we've got the chart up there, and we've got the inflation going up above over 4% through the year. The Bank of England's target for inflation is 2%, so that's double that. The core measure, that's even running at over 3%, around 3.5%. So this has prompted a lot of concerns in the UK about inflation, and Boris Johnson is trying to do his best to calm everyone down because people are starting to get concerned about it. And he's saying, well, it's got to do with energy prices. We've talked about the oil price and petrol prices. So, yep, that's part of it. But it is more than that. So he's also pointed to supply chain issues and then the COVID bounce back. So they're having, like many of our economies, as we've opened up, things have come back quite well. And we're going to talk about that in the Australian context soon. And so they're seeing that in the UK as well. And they've got a tight labour market. And so meaning, there are jobs there, but they don't have as many people available for those jobs as normal. And so that's putting pressure on wages as well.
Yeah, right.
So, that's essentially the story with the UK. So pick up in inflation. And if we look at, I don't know if you remember last week when we had that deep dive into the US numbers. US Bureau of Labour Statistics really do a great job with their data and helping you drill down into it. I've tried to figure out what's going on with the UK. I didn't see anything as useful. I could be wrong. If you're familiar with any the UK sites, and if they actually have a nice drill down, then let me know. That I'd be appreciative. I've pulled the data out of a data service I use, Macrobond, and the top line there, the dark red line, that's transport. So we're talking about petrol prices. What was that? 10% through the year. So that's high, very high. And then some of the other categories are still reading very high. And so restaurants and hotels. That's that's that line there. That's the sort of third highest there, and that's I think it's around 6% or so. And then you've also got furniture, household equipment, and maintenance. That's that orange line, which is the second highest. And so you've got all of these different categories being disrupted by these shocks. We've got these supply chain concerns, and we've got all of the pressure from reopening, and we've got pent up demand, you could describe it, and everyone wanting to buy things, and there's big disruption that's occurring. So quite a range of factors that are involved, and it's difficult to provide a nice, neat explanation of what exactly is going on.
I think it's like you say, isn't it? Just the supply isn't meeting the demand. We've been in a backlog for some time now. We saw it with the cars last week, which then pushed the cost of second-hand vehicles up. I think it was 25%, wasn't it?
Yeah, in the US,
There's
that
a
was
massive
mad.
jump. And
Yeah,
so,
yeah.
like, you would hope that this would all level out once the supply has sort of been met. But clearly it's going to take a little bit longer.
Oh, it's going to take, I think, quite a bit longer, really.
Gene, I just want to ask,
yes.
what's that big spike? Which one is that? I'm trying to work out which line that is. Because that stands
Which one
out.
with
Well,
the blue?
This one here, yeah. So
That
which one is
was,
that?
I think that might be restaurants and hotels.
Okay.
Oh, I mean, look, these are through the year numbers. So what could happen is it could be because in 1 year ago it was suppressed for some reason, and then it reads as a higher number. So
They just stood out, but I mean, I know they're all heading north.
I'll have to have a closer look at that, Tim. But good question. Okay, so that was a detailed look at the different categories of expenditure that influence the CPI, and we can also see the inflation occurring in the costs faced by producers, and then what they're charging other producers that they're selling to. So if they're in the supply chain and they're supplying to someone downstream of them, then you're starting to see those costs go up too. So yes, concerns about inflation in the UK as there are in the US. I mean, the US is it's getting higher inflation than the UK, but I'd say we've got this consistent story of accelerating inflation, and potentially that's going to lift inflationary expectations over the medium term, and that's going to start affecting, people are just going to build it into contracts, that they will have escalation clauses, and into wage agreements, they will sort of naturally just push for higher wages to compensate for inflation. Now, still in Australia, we haven't really had that much, because wages growth really isn't that spectacular. But it could happen. I mean, if we have this inflationary story and inflationary expectations increasing, so we're nowhere near the rates of inflation we had in the 70s and 80s. I mean, we've shown those rates before, where we're talking double-digit rates, but this is certainly something to keep an eye on.
So what might we expect the response from the government to be to this, if any?
Oh, well, it's the central banks. It's the Bank of England. It's the US Federal Reserve. It's the Reserve Bank of Australia that will respond to this. I mean, this is within their bailiwick. Is that the word? Or their sort of...
It's one of those words I've seen written down and I've never heard it spoken before.
Well, it's in there. That's in there. That's their responsibility to look after inflation.
Their jurisdiction.
Because inflation's a monetary phenomenon. We know that. This is what Milton Friedman taught us.
It's the three of us were saying before, you, me and Milton.
Yes, exactly. And so the idea is that monetary policy is well suited to targeting inflation, and so all of these central banks have inflation targets.
I mean, this is I'm in this as the bloke on the street. So this is completely down to the banks, and the government has no influence on this at all. Then, yeah.
Oh, it certainly has an influence on it, because fiscal policy by governments is one of those factors that affects the economy. There's no doubt about that. So government's certainly involved, but it's the central bank through monetary policy that's best placed to deal with inflation. So, I mean, this is a good question. I mean, maybe we can come back to that in another live stream.
Yeah, that'd be interesting to see, because obviously it's linked, but the influence would be interesting to see how much influence the government could have on a market, and vice versa, how much influence on the government or politics that the financial markets have too, or the banks.
Yeah, absolutely. Look, I think we'd have to have a reasonably long discussion about macroeconomic policy and fiscal and monetary policy, and look at the history of it. I mean, there's a yeah, there's
We'll put
quite
that to one side.
We'll
for
put
today.
that to one side for now. But I think the takeaway, what does it mean? And the Financial Times has summarised this very well as usual. So their write-up of the latest UK inflation data began. Pressure on the Bank of England to raise interest rates is mounting after inflation reached its highest level in almost a decade in October, threatening to tighten the squeeze on living standards in the UK and destabilise economic growth. So, yeah, that's the potential response to that. Okay, so that's inflation in the UK. So what I'd like to move on to now is the jobs boom that the PM has called in Australia. So our Prime Minister yesterday came out and he pointed to, well, hundreds of thousands of jobs being added before Christmas, we expect, because of the high levels of vacancies relative to what we've seen in recent years. And certainly compared with what happened during COVID when they just crashed, when everyone was worried about the future.
Yeah.
But we've seen high vacancies and everyone's excited about the reopening of the economy. The PM's excited. He said, we want you. So we want you to come back into the labour market. He's
doing an Uncle Sam.
He's doing it, yeah. Well, he's got an election coming up. So, yeah.
Did not see that coming.
So he's talking up the economy. I mean, and I think he's got good reason to do that. One of the big issues is migration. And so business groups and also Dom Perrottet, the New South Wales Premier, they're calling for an increase in migration. Well, we haven't had any really. I mean, because no one's been allowed back here to come in here unless you're an Australian trying to return. So we've got business groups pushing to, get migration levels back up, but the PM so far seems to be he's been a bit cool on that. And Michael Stutchbury, the AFR editor, he sent out an editorial note this afternoon. So just before I hopped on, I thought it was a good note. So if you're not on that mailing list, it's worth getting on. And the way he describes it is the PM dodges the migration challenge. So the PM doesn't want to respond to those calls to increase migration until after the election. But there's going to be a big discussion in Australia about what level of immigration we should have as we come out of the pandemic, as the economy rebounds, and business groups are going to be pushing for higher immigration because it helps them in terms of getting recruits, for getting labour supply. Yeah. It also adds to demand in the economy. So they're going to be pushing for high levels of immigration. But then, as I think we talked about this last week, there are concerns about, just how quickly can we absorb people, the strain on infrastructure, strain on services. So I think we're going to have a big debate about that in the next few months in Australia.
And I imagine that's the kind of debate that happens every time immigration's brought up, which is fair enough. But certainly we would expect those numbers to certainly increase from what they have been, because they've been zero.
Well,
but what would be the expected? Is it talked about as a percentage rate for immigration levels? What terms are used to define?
Well, you could talk about it in a percentage rate. You'd probably, I guess you could talk about it in a percentage rate or numerically. I mean, sometimes it's been running at about, at least 1% of the population. So the bulk, or at least half of our population growth, was coming from the net overseas migration, and the other half or less than it was coming from natural increase. Yeah. So the births over deaths. Now, I'm not sure we have had that discussion I don't think we've had a really rigorous and robust discussion about appropriate immigration levels in Australia. Or we've only done it once it was clear that the rate had got too high. So particularly in the late 2000s, because of very sort of generous visa arrangements for students, overseas students coming here, and we made it easy for students to come. If you studied commerce, if you studied accounting, to be easy to get permanent residency and to stay here.
Yeah, fair enough.
Then we had this huge pickup in net overseas migration, and I think it was like, I don't know, 350 to 400K in 1 year. So toward the end of the Howard government, I can't remember off the top of my head, but it was a very high rate. It normally runs about 250K, I think, or it has been in recent years.
So that's about that 1% basically then. So what are we, about 28 million now?
I think we're
27?
still about 25.
Really?
Yeah, 25
Okay.
and a half or something like that. Yeah.
Okay. So still around
Yeah.
that 250K would be a normal year then, historically, like over the last decade.
Yeah, I haven't got a chart for that, but I'll get a chart
Figures
for
are
that.
figures are thereabouts.
I'll get a chart on that for next week, Tim, just so we've got that. That's a good question. Okay, so where are we going with that? We're saying that yes, there's going to be a debate over this. At the moment, it looks like there are plenty of job vacancies and. The PM's calling for people to go fill them, so industry can find the workers that it needs. Okay. Oh, and in this debate over immigration, people will bring up the issue of wages, of course, because one reason industry wants to import workers is because that can help keep pressure down, or put pressure down. Or put downward pressure on wages growth.
Right.
Yeah.
Okay.
Yeah. Because of the additional supply of labour. So that's one reason that industry likes immigration.
That's an interesting one, actually. I hadn't seen it from that. I thought about it from that perspective. So, because from the workers' perspective, of course, that's not great. This is people in the industries obviously are far more interested in wages going up.
Yep. So there's a big debate about to what extent immigration benefits your economy. But I mean, it will, if you have skilled immigration, then it will lift your GDP per capita. But a lot of that is associated with the earnings of the people who come in, the skilled migrants, and is not necessarily helping to boost the incomes of the existing residents. So it's less clear that it's doing that. So that's one of those issues that's contentious. So we might have to review the latest evidence on that sort of thing in a future discussion.
Because it's that thing of, like, we were talking about it last week with the increase in house prices, for instance, completely outstripping any wage increases. Like, that's been left for dead. And the property market is one that so many people measure, a sort of, it's a big yardstick to try and own your own home and get on the property market. It's a big goal for a lot of Australians, and like seeing that get further and further out of reach is it's difficult to see that the wages being suppressed. But I guess it's again, supply and demand. Is that
it's all I mean, it all comes down to supply and demand. So the thing is, if we didn't have the labour coming in from overseas, then to fill these vacancies, perhaps employers would have to lift wages. They'd have to pay people more in Australia to induce people who are marginally attached to the labour force, as they say. People who might work if the wage or the salary was high enough, but otherwise, we may as well just stay home, and maybe they've got caring responsibilities or that sort of thing.
I think it's interesting because it drives the gig economy and the side hustle for people working, which in some ways is good. But I guess if that's their way of getting ahead to make up that shortfall in wage increase, then it potentially extends that working week out as well. So people could be doing 40 hours a week paid, and then another 20 hours a week as a side hustle plus. So adding stress on the household as far as time spent trying to earn a quid, if that makes sense.
I'll have to think about that, but we can chat about that afterwards. Okay. It's interesting, interesting idea. Okay, the other big news in Australia that we have to mention, Tim Payne. What's going on?
I've missed all of that. What happened?
Oh, you've missed it?
Yeah.
Well, he's resigned.
Oh, really?
Yeah, the Australian Test cricket...
That must have been today then, yeah?
Yes, it was a few hours ago. So the Australian Test captain, cricket captain, has resigned because of a sexting scandal. So just absolutely unbelievable. I don't know, just extraordinary. So I think he did the right thing to resign. He had to. Really inappropriate behaviour and just quite inexplicable. Just so you'll have to catch up on that after the live stream. It's a huge story.
Okay.
And we have to think about what it means for the first
Ashes.
day of the Ashes. We're going to the first day of the Ashes. So
That's a big blow for Australia, Gene.
Yep, a big blow for Australia. But at least the economy's looking good. So cricket, Australian cricket.
That's a side issue now you've mentioned the cricket.
I know. Sorry, I didn't know you weren't aware.
No, it's fine. It's fine.
Okay.
That's a shame though. I mean,
it is.
But no comment. I don't know.
It just goes to show the importance of judgment. You just need.
Well, he
judgment.
came into the Australian team on that kind of ticket. That was so. Yeah, man.
Yeah. Okay. Well, we'll move on. The final thing I would like to chat about is crypto. So my ongoing commentary on crypto. Essentially, I think, I'm not a great believer in crypto. I think it's risky. It's essentially gambling. And the head of payments at the RBA, Tony Richards, came out yesterday, I think it was, with a warning about crypto. He's saying, cryptocurrencies are speculative assets. They could crash in his words, when central banks decide to exert control over their monetary system. So there's concerns. People who have crypto would be concerned that there would be a regulatory crackdown because of, concerns about, people making risky speculative investments in crypto. That's one thing they might be concerned about, but also the potential for money laundering and illicit trade and all of that sort of thing. Yeah. So, look, there is that potential. I think crypto is super risky. I thought Bitcoin was massively overpriced when it was 20,000, but then it's 20,000 US, but then it went up to nearly 70,000. So look,
isn't this the Wild West? This is the Wild West at the moment.
Absolutely.
I saw a new one just an hour ago, just here in Brisbane, just drove past it. I forget the name of it. It was one I hadn't seen before, and it was just another cryptocurrency. What's the difference between the pyramid schemes of the 80s and the 90s and new cryptocurrencies coming out? Because it seems to be similar, as in, like, if you're in there first, you're going to get a whole lot of people panicking to get on board. So the first people on board will most likely make money. Whereas once it gets to the point where the most people are on board, then that's when these will start to fall over. Is it just a fancy kind of pyramid scheme? It's
not a pyramid scheme. I think that's something different. I mean, that's a clear fraud.
Just with the proliferation of new ones, that's all. Because they're all clearly, not all of them will be sustainable. I personally think that there will be one or several, like Bitcoin is the leading one at the moment, but I imagine that they will prevail. That cryptocurrency in some form will keep going. Of course, I don't know, but that's what you would imagine, that this would be the way of the future in some form.
Well, I mean, I'm not sure. I'm not sure what problem it solves. I mean, it certainly could solve problems for people who want to finance illegal transactions. I mean, that's one problem it could solve. But it doesn't seem to be that effective a currency in my view, because it's not stable. I mean, who'd write a contract in Bitcoin or Ethereum or whatever when it's so volatile?
So recently we spoke about that Tim Ferriss episode. We're both big fans of Tim Ferriss, and he had on Naval Ravikant, and I think it was Chris Dixon. And Naval Ravikant, very smart guys, and Naval was talking about crypto, and they term it Web3, where with the early days of the web were Web 1, where it's all dial up and slow. Web 2 is where we are now. Pretty much run by 5 big tech companies. And Web3, which they're talking about, is the world of NFTs, non-fungible tokens, Bitcoin, cryptocurrency, this kind of thing. So ownership sort of spread out amongst many rather than owned by a few big companies. In a nutshell, so they talk about Web3 and are very excited about the progress of it. So it seems that whatever we see now or may think it's going to be, no doubt it will develop to be somewhat more. There's a lot of smart people on board with it. We're not too sure where it might go, but my feeling is that cryptocurrency will develop into something that we all become quite familiar and use. But hey, what do I know? That's just a hunch.
Well, let's see, Tim. I mean, I can't understand it. I've never understood the logic of it. And we're seeing central banks developing their own central bank digital currencies, which I think are based on the blockchain. We'll have to have a conversation about that in the future. But that may be a way for central banks to create a competitor for these cryptocurrencies that provides people with an easy digital means of payment and a cheap means of payment. So they could be competitors to crypto. I mean, yeah, I just don't understand crypto. I don't know how you would value it. And the fact it's just bouncing all over the place. I mean, we see that it was plunging this week. So it hasn't been a good week for crypto. So we've got Bitcoin down at, I think it was 56,000 US for one Bitcoin when I last looked. I mean, how could you invest with any confidence in crypto? I think it's an example of the greater fool theory. I think there's this idea. I mean, look, if you can time the market right and you can take advantage of the narrative around Bitcoin and these cryptos and all the psychology, you might be able to make money out of it. And certainly there have been some people who made spectacular amounts of money out of it, right? So they rode the wave and they've got off at the right time.
I mean,
but how can you value it? I think one of the best pieces of investment advice I've ever heard, I think it was Warren Buffett. If you can't understand something, don't invest in it, right? No matter how good it might appear or how hot other people tell you it is. If you don't understand it, don't go anywhere near it.
Well, that's certainly Bitcoin for me. And I know many people are into it as such. And got a mutual friend that we've been talking to about coming on and doing an episode for Economics Explored. So it's funny. I've heard these deeper dives several times with Bitcoin, and it's still a bit of a mystery. But one thing that does come through quite clearly when people talk about the markets, they say, yeah, don't go in there to try and make money. That's not the eye. Well, yeah, some people are doing it and doing very well, but it's speculative. And so a lot of the money that's in there, I think, is speculative at this. It's money that people can afford to lose. Not everyone, of course, but that's the idea behind it. If it goes well, great. If you lose it, you shouldn't be too surprised. It seems to be the general sort of rule of thumb with it. But clearly it's been phenomenally successful. But yeah, what will happen in the future, who knows?
Exactly. Okay, none of this is investment advice, and clearly, if you followed my advice, or you followed what I was saying back in, when Bitcoin was 20K, and I thought, oh, that's crazy, you would have missed out on a big investment opportunity. So sorry. Righto. Excellent. Okay. Thanks for watching, and I hope you enjoyed that wrap up of the week. Both Tim and I have had fun talking about the latest news of the week.
Yep.
Tim, anything else?
No. If you have any feedback, then please let us know. And if you have any questions or have anything you'd like us to cover in more detail or in the next episode, please also let us know.
Good stuff. Okay. Thanks, Tim, and thanks for watching.
Thank you.